I got a message from one of my subscribers this past week that he made over $70,000 on just one stock through the market crash. I'll show you what that was and how he did it. Plus, I'll do my regular weekly market analysis. We will do a market scan. There's some great opportunities in energy stocks, and I'll try to show you some names to consider. And then, of course, we'll do the day trade of the week on VAL. All right, so welcome to this week's Market Minutes. This past week, one of my subscribers in Active Live, which is my service where you can monitor the stocks that I'm day trading and swing trading through the week, live webinar every day. Someone made a great profit on GNUS, over $70,000 in the past 2 or 3 weeks. And it all started by him focusing in on the action candle that we look for every day. Now, when we're day trading, we look for these action candles on a 2-minute time frame. And when we are swing trading, we look for them on a 13-minute time frame. Now, of course, if he held that stock for a few weeks, then that was a swing trade. So we're going to focus in on the chart of GNUS as it was just a few weeks ago when it made the break from a predictive pattern with the action candle. And I'll just walk you through the economics of it. Now, of course, one of the things that happens with market crashes is it really creates great opportunity because of fear, which then turns to emotional opportunity, people taking too low of a price for stocks. And then when the bounce back came, now you've got the emotion of greed, which causes that stock and the market to go up a lot more sharply. And GNUS, I think, really benefited from the very optimistic feeling among investors over the past few weeks because we've had such a great bounce back from the fear. And it's really brought back the retail investor. Many of them have moved out of ETFs, which is where a lot of their money was being collected, and now they're focusing back on individual stocks. And it reminds me of the market that we had back in 1999, 2000, when it was all about retail investors chasing hot stocks higher. We have that again, and GNUS is a great example of that. So if we can find what we call alpha stocks, then we can identify those that have the best potential to make these lucrative runs higher. So in this example on GNUS, we have here the chart, and it goes back to May 12th when this particular person, actually May 13th, when my subscriber bought the stock. And what we're looking for are anything with a pink dot. Now, it's a little bit hard to see because the chart's so small, but there's a pink dot on that candle, there's a pink dot there, and then there's also one right here, and that's the one that triggered this trade. So these pink dots are there because my algorithm, which is called a Stockscores action candle, is triggered. And essentially what it is a statistically significant price move with statistically significant volume. And when we get that breaking from a predictive pattern, we often get strong price trends that come out of it. And it's really the core thing that we're looking for in that active live service every day. So here you can see the stock was trading sideways. It made the action candle and the stock went up very quickly over the next couple of days. But that's not the time when Allan bought the stock. He bought it right here. And this is a break from another predictive pattern called a pennant. And so any of you that follow chart patterns will know that that is a pennant. And we had the action candle break from the pennant there. And so that's when he initiated the position, buying 10,000 shares on that day. I think 5,000 at 98 cents and 5,000 at $1. Now, if we go to the next slide, we can see just where the stock went from that point. So the yellow arrow over here was the point that he was buying. And look at how sharply this stock moved higher, ultimately going into a parabolic upward trend that fell just short of $12 this past week. Now, through this upward move, one of the things I do in Active Live is I answer people's questions through the day. And he asked me, I would say 2 or 3 times, is it still okay to hold this stock? I said, well, the uptrend is still intact, and therefore, as long as you're comfortable with the risk of holding this thing overnight, yeah, it's still a hold. There's no sign of breakdown yet. He ultimately sold the stock here. We'll go into the economics of it, but I believe he sold it on June 3rd this past week and locked in a very big profit. So let's just go through the economics of that. He bought 5,000 shares on May 13th at 98 cents and then another 5,000 at $1. So the total price of that trade would be 9,900 US plus commissions. He then sold 5,000 on June 3rd at $6.30 and the other half at $6.17. Now this person is in Canada, and so his Canadian dollar profit from that trade after commissions and slippage and that sort of thing was $70,688. All this through a market crash that many people have avoided, but yet there are some outstanding trading opportunities. This just one. I mean, realistically, every day there's 2 or 3 of stocks like this that just make these huge moves. And when we talk about the day trade of the week at the end of this video, I will show you that as well. All right, well, let's get on to this week's market analysis. But before I do, just a reminder to subscribe to the channel. I upload a video every week with some market analysis, some trading lessons and that sort of thing. So subscribe, hit the notifications bell, and you can get instant email updates when I put up a new video. All right, so into the US market analysis, and this is the chart of the S&P 500, 30-day, 60-minute, and you can see that very simply, we are in an upward trend, and therefore we must be bullish of this market in the short term because the bottoms are rising, and although it may not make sense how quickly this market is going up, the fact is, it is going up, it is in an upward trend, and don't try to fight it. All right, so moving on to the longer term chart of the S&P 500, and we've got that V bottom. You can see here the market went straight down on COVID and it's gone straight back up. Very unusual. You don't usually get V-shaped bottoms, but perhaps the market got a little overextended to the downside, and now you could argue that it's getting a little overextended to the upside. However, there's still no break of trend. Now we are coming into resistance where I expect the market will get stuck, and so the upside is pretty limited. What I'm watching for now is whether we make a falling top. Do we break this sharp upward move, roll over, and start to go down from a top that is lower than the previous one? If we do, we could get another wave of selling pressure, the second coming of the market crash. So you want to watch very carefully for that. Very simply, just watch for the upward trend line on that last chart that I showed you as the first clue that we are going to gather some selling pressure again. Looking at the small cap stocks, they have also been moving up nicely, and really great opportunities in the small cap sector. A little overextended. You can see that we gapped up fairly significantly on Friday, and therefore I think it's not unlikely that we'll see a little bit of a pullback, but the daily upward trend line on this chart is still in place, and as long as it is, I am optimistic about the small cap US stocks. On to the Canadian markets, and let's take a look here at the Toronto Stock Exchange 30-day, 60-minute chart. And much like the S&P 500, it is in an upward trend. It's at the top of the channel, or close to the top of the channel, which means it's a bit overbought. Wouldn't surprise me if we pull back a little bit next week, but it's a healthy looking market, and a pullback would be healthy as long as it does not break the upward trend line from a falling top. I will continue to be a short-term bull on the Toronto Stock Exchange. Now, long-term, similar situation to the S&P 500. It's made that V bottom. It's getting up closer to resistance at the old highs. Still got some upside, but once it gets up in that range, we'll have to see if it makes a falling top and breaks the upward trend line, or if it actually moves up to new highs. Looking at the Canadian micro-cap stocks, the TSX Venture, great recovery here. It's made back just about all of the losses, largely moved by the strength in mining stocks, which have done well as central banks are printing money. It looks generally pretty good. On to the currency market. We'll start off with the US dollar, and it had a bit of a rough week again. It hasn't broken down through support, so we shouldn't raise the alarm bells too much, but it has broken this little short-term upward trend line. I think it'll bounce back next week because it is at that support zone that is held up on numerous occasions, but we'll have to keep a close eye on this. Money may start to be moving out of the US dollar, and that could be a bit of a weak sign for the stock market if money is in fact leaving the United States stock markets and going elsewhere because they're a little overbought. We'll have to see. No sign of real concern yet, but something to watch. Canadian dollar, last week I said the Canadian dollar looked likely to move higher because it broke through this resistance zone, and it had a great week this week, moving up well over a cent, probably a cent and a half, and it's getting back toward its old trading range. I think that's probably where it's going to go, get up to that $75, $76 on the ETF, which basically represents 75 to 76 cents on the US dollar. Not there yet, but it looks like it will get there. On to interest rates, and of course we've had a real falling interest rate market, and of course if this bond chart is going up, that means interest rates are going down. But this past week, the bond market fell back a little bit, and that means interest rates have taken a little tick higher. Not a big concern yet because the upward trend line is still intact, but you can see it's what we call a broadening top pattern. We're getting more and more volatility, and that means more and more uncertainty about the future direction of interest rates. And so while they are low, I think if you are giving any thought to wanting to lock in debt, now is a good time to do it if you have not done so already, because it may be that interest rates are bottoming here long term. And finally, we'll get into the commodity section. Gold has had a bit of a sell-off. It's still in a long-term upward trend. I think you generally have to be cautious with gold in the short-term chart. It is breaking some short-term upward trend lines. The long-term upward trend lines are still intact, so this may just be a little pullback. But if you are long of some gold stocks, you may want to think about taking profits if they start to break down. And the oil chart, I'm using BNO this week. Someone pointed out last week that USO is not really a great proxy for oil anymore. I don't know if this is much better, but I'm limited in that I have to find something that trades on an equity market. And BNO does. It represents Brent oil, which is North Sea oil, and I believe. And you can see that the downward trend line on oil has been broken. However, we are not really building rising bottoms yet on that weekly chart, so we'll have to see how this progresses. And we always look at the fear chart. You see fear slowly coming down, and that is a good sign, although the volatility is more to the upside now. So I would say that the VXX is pricing in maybe some expectation for more volatility in the future. Makes some sense given how far the market has come up. We may get some downside volatility again soon. We'll have to watch for breaks of upward trend lines. So my ratings then, neutral on Canadian and US stocks long term, but bullish short term. They're all in an upward trend in the short term. I just feel like we have to be cautious because eventually we're going to get some profit taking here. Gold, neutral long term, bearish short term, and oil, neutral long term and bullish short term. Oil is making a decent recovery, and it's creating some opportunity in the oil stocks, which I'll show you in just a moment. So upward momentum is strong, and the buyers seem to step in on any weakness that the market makes. It's really a great market for trading right now, but we should not get complacent as the buying is starting to look a little bit irrational. You see the emotion coming in on the upside, people chasing after greed. Gold is losing its luster as it did have a rough week this past week, but oil is on the comeback trail. We should not shy away from the fact, however, that the trail is steep for oil. There is lots of work to be done there. Fear is slowly dropping, but we still have a very emotional market. All right, well, let's do a Stockscores market scan now. And this week, because there was a lot of strength in the oil stocks on Friday, what I want to do is run the abnormal breaks market scan on Stockscores on the Canadian market, because there are so many energy stocks listed on the Canadian market. Many of the stocks that we'll find are also listed on the US markets, often on the Amex. And so if you see a name here that comes up and you want to buy it on the US market because you're in the US or some other global marketplace, then take a look at the potentially that listing on the US side. So let's jump right into it. I'm going to just go over here to the market scan tool. We're going to select Abnormal Breaks Canada, which is one of the preset investor scans for our members at Stockscores. Run the market scan. It found 34 stocks, and we'll just take a look at the charts, and I will try to pull out some that look pretty good. First up, Surge Energy. It is breaking from a rising bottom with very strong volume. You can see here the volume right at the end of the day, or pardon me, on Friday, very strong, breaking out of a little ascending triangle. I'd give this a 7 out of 10. And hard to believe that this stock is under 40 cents, but it looks likely to move higher near term. Grand Tierra Energy, GTE, I think it's okay. It's a little bit choppier of a chart, not quite as clean of a pattern. If I was to give the last one a rating, Surge Energy, I would give that a 7 out of 10. This one I would give a 6.5. It's just a little lower quality. Just Energy, JE on Toronto, pretty good. I'd give it a 6. The volume there isn't quite as strong. This Cardinal Energy looks good. CJ, I'd give that a 7 out of 10. Now what I'm looking at is the pattern, and this is actually something I call a bottom fishing pattern. It has 3 phases: break of a downward trend line, build of a rising bottom, and then break up from a rising bottom. And you can see that here as well. The limitation here is the volume wasn't all that strong on Friday, whereas Surge Energy was quite a bit stronger. So I'd give this a 6.5. It's a very similar pattern, just lacking that volume support. CEU, I'd give that a 6.5 as well. Freshie, a 6. Kelt, KEL on Toronto, a 6.5. We'll look at one more page here. A lot of these are really looking great. Secure Energy Services actually started its move on Thursday, so it's a bit late on Friday. I'd still give that a 6.5 though. Next Gen I think is a bit too late. It's already gone up a lot. Paramount, I really like this one. I'd give that a 7 out of 10. You can see the difference here. See how the volume spike on Friday? So that was a stock that was being accumulated fairly aggressively on Friday. So Paramount I think is a one worth considering. Whitecap is one that I featured, I believe, in this video a few weeks ago, and it's a good hold still, but I wouldn't chase it here. Shawcor, I'd give that a 7 out of 10. Enerplus, 6. It's already kind of well into its trend. Husky, 6.5. You see all the charts here. And if you just want to buy the ETF and buy a basket, it's not bad. I'd give it a 6.5. It's already moved up a little bit. We'll look at just this last chart here, Enerflex, EFX. I would give that a 6.5 as well. So let's now go on to the day trade of the week. And this week, I want to talk about a stock that triggered the 2-minute action candle on the chart on Friday. And of course, we have an algorithm that runs in my active live service all day long. It's refreshing constantly in real time. And it's looking for stocks that are making these statistically significant moves. And then we check the chart to see if they're breaking from a good chart pattern. So VAL did this on Friday at just after 11. I think it was 11:12. If you look at the chart where my cursor is there, you can just barely see a little pink dot. So that is the action candle indicator. And it's breaking from a predictive chart pattern. That pattern is called an ascending triangle. These are some of the things I can teach you if you choose to sign up for the education on Stockscores.com. So for $100 of risk, we would buy 8,260 shares. It's a pretty cheap stock. It was trading at around 45 cents at the time. That required capital of $3,715. We cannot margin a stock at 45 cents, so we have to put up all that cash. So $3,715 to buy the 8,260 shares. At the end of the day, way up here, this stock had moved a multiple of risk of 39.6. That meant for $100 of risk, this trade profited $3,960, which was a 106% return on a one-day hold. And that is, well, pretty darn awesome. So hopefully you've enjoyed this week's Market Minutes. Again, a reminder to subscribe to the channel, click on the notifications bell so you'll get email updates when I send up a new video. I'm going to try to do some more videos soon. Also, click on the like button if you enjoyed this video, and leave a comment if you have any thoughts on what I've talked about today. Most importantly, have a great week in the market and trade well.